On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Hi team, hope you're all well. I hope the weather is treating you kindly wherever you happen to be. Let's run through everything that went down last week, then let's turn our attention to what we need to keep an eye on in the week ahead. Last week was a bit of a tough one for global share markets. US equities gave back some of those gains that we saw post the election. The S&P 500 index down 2.1% last week and the Nasdaq down 3.1%. The Nasdaq does have more of those growth stocks, tech stocks in it, and that means it can be more sensitive to changes in economic sentiment, market sentiment, and interest rates, so it fell a little bit more heavily. Emerging market shares were down even further than that. The emerging market index went down 4.5% last week. That's its biggest weekly decline in more than 2 years. Other global markets fell, but they were down much more modestly. Japan down 1.1%, Europe down 0.7%. The UK off just marginally, same with Australia, and the local NZX 50 index here in New Zealand down 0.7%. So still not looking too bad when you think about this quarter, when you think about the month of November, which is about halfway through. For November, New Zealand's up, Australia's up, the US is up, Japan's up, some of those other markets down slightly, but not too bad. And when you look at the quarter, the fourth quarter of this year, New Zealand, Aussie, the US, and Japan again all up. And currency movements have moved in our favour too. So we've seen the Kiwi dollar that has fallen quite sharply against the US dollar this quarter, down 7.6%. That's really supercharged the return from US shares. So that's another piece of good news. And we're off a bit in a currency sense against the British pound and the euro and the Aussie dollar actually. So the returns from all of those regions have risen when you convert them back to Kiwi dollars. Interest rates did push higher. We saw the US 10-year Treasury yield rise from 4.3% to 4.44%. That's the highest it's been since early July. And that was before the Federal Reserve in the US started cutting interest rates. We saw a cut in September, I think it was, wasn't it? Then another one in November. But the US 10-year Treasury yield is actually above the levels that it was before that even started happening. Markets now see a pause from the Fed in December. Pricing suggests about a 60-odd% chance of a pause, only a 40% chance of another 0.25% cut. So markets have moved to expect the Fed to pause, and when you look out through to the middle of next year, so sort of to the end of June next year, pricing implies just 2 more 0.25% rate cuts from the Fed. So markets are expecting the Fed to go a lot more slowly from here. There's a whole range of reasons for that we won't run through, but I did talk about some of them in another episode that I recorded about some of Trump's policies and what they might mean for interest rates and US economic growth. That was just a few days back, so go and dig that one out and it will shed some light on what you're seeing across interest rate markets. Here in New Zealand, market interest rates also moved higher. The 5-year swap rate finished the week above 4% last week. Now that's a full 0.5% higher than where it was 2 months ago. 2 months ago it was about 3.5%. Now it's at 4%. We've got the last Reserve Bank of New Zealand decision of the year scheduled for next week, and unlike the Fed, expectations here are that we will still see a cut. Another 50 basis points cut to the official cash rate is still seen as a certainty. It's fully priced. So markets are expecting that, but those longer term interest rates have been creeping up, and that does have implications for fixed income yields and mortgage rates. So we need to keep a close eye on what is happening there. It was a bit of a quieter week in terms of economic releases. There certainly wasn't as much going on last week as the previous week, but we did have a couple of things that are worth singling out and just discussing. The US CPI report was out for October, the Consumer Price Index, the inflation report, and it wasn't too bad, came in line with forecasts. So for the month, the headline CPI rose 0.2%, the core CPI increased by a slightly stronger 0.3%. So when you look at the annual inflation rates, headline CPI running at a pace of 2.6% per annum, core CPI 3.3%. Now, that is in line with expectations, but that headline CPI at 2.6%, that's actually a 3-month high, and that core inflation rate of 3.3 is pretty close to where it's been for the last 5 months. So it still needs to come down a little bit further. And even though there weren't any unwanted surprises in that report, it didn't come in hotter than expected or anything like that, we got some comments from Fed Chair Jerome Powell a couple of days after that release, and they did just suggest that the central bank, the Fed, is in no real rush to reduce interest rates dramatically, at least not quickly. The US economy is still in good shape, the US labour market's still in good shape, and that's what I think has really changed those expectations for next week's Fed meeting. After the inflation report was released, markets were still thinking you will see a cut in December, but then when Powell came out and said, oh, look, the economy is actually pretty good, labour market's pretty good, no real rush to cut rates in a big way, we can take our time. That is what seemed to change things. So there's some good and bad there. It's not a bad thing that the economy is in good shape, that the labour market's in good shape, but that does go hand in hand with inflation that's slightly higher, and it just suggests that the Fed can afford to just take its time and go a bit more slowly. So interest rates in the US will still come down, but they're not going to sort of drop like a stone. And I think that ties into some of that US dollar strength that we've seen of late. So that's one reason why the Kiwi dollar is down 7.5% against the US dollar over the last little while. It's more about, or it's as much about what's happening in the US as it is about what's happening here in NZ. Locally, we got another housing market report from the Real Estate Institute. This was for October, and it continued to point to signs of improvement, so that's positive. Nationwide sales volumes up 10% for the month, that is, and they were up 20% on the same month a year ago. The days to sell lower. The days to sell sitting at 43 in Auckland, 42 elsewhere. That's a really important indicator of an improving market. When that days to sell is going up and up and up and up, that means buyers are sort of sitting on the sidelines and you're not really seeing much activity. But as it comes down, there's more stuff happening, more stock moving. It does usually suggest that there is a little bit more optimism out there. The house price index, the national house price index, that is, rose 0.4%. That's the second consecutive increase after a string of declines. So we've now seen it go up for 2 months in a row, which is good. National values are about 3% higher than the trough, which came about 18 months ago. It was May 2023. So we're not much above those levels, only about 3% above those levels, and still more than 15% below the peak, which came in late 2021. Auckland prices increased much more marginally, and the rest of the country was stronger. We saw the rest of the country lift 0.6% for the month. Turning to what's coming up this week, and it is a little bit quieter on the local front. The only real release that I'm keeping an eye on will be dairy prices. They'll be out on Wednesday morning. Seen some real good news across this sector of late. We've had a string of positive developments. At the last GDT auction, the headline GDT index, that stands for Global Dairy Trade, the headline GDT index rose 4.8%. That was the strongest gain since mid-August, and that was enough to see Fonterra last week increase its milk price forecast for this current season. So they do a range, but we tend to focus on the midpoint of that range. Before, the midpoint was $9, which was pretty good already. Now they've boosted that to $9.50. Now, if that happens, if they actually hit that, that would be the highest of all time. The previous record is $9.30. We saw that 3 years ago in the 2021-22 season. So heading for a record payout, and it could even go a little bit higher than that. It could hit $10. That's certainly possible, especially when you think about where the currency is going as well. Dairy commodities are priced in US dollars. So if you get a stronger US dollar, weaker Kiwi, that actually helps that farmer payout. What else did Fonterra say when they were talking about the reasons for that increase? They said the outlook had improved because of strong demand out of China. Chinese production below expectations. They need to buy more from elsewhere, i.e. from here, and also some good demand out of Africa, the Middle East, Southeast Asia. So a lot of talk about tariffs and what that will mean for global trade, and no one really knows. We'll have to wait and see. But right here and now, that's a real good news story for New Zealand agriculture and all of those communities across the country that do hang off that farming sector and rely on it. So that's been really positive lately, and we'll get some new news in terms of dairy prices on Wednesday morning. Not a lot else happening here on the local front, at least in an economic sense, although there are a number of companies that we should keep an eye on, a few results. Napier Port releasing a result on Tuesday, Argosy Property on Wednesday, My Food Bag on Thursday. On Friday, you've got a few, E-Road, Kiwi Property, Oceania Healthcare, and there's a few AGMs to keep an eye on too. Kathmandu, A2 Milk, got an annual meeting on Friday. You might get a trading update from some of those companies. The Warehouse also do have an AGM on Friday. Right, to look overseas, flash PMIs will be the highlight for me. PMI stands for Purchasing Managers Index. These are essentially activity indicators. They come out very quickly, so they're always a very good, timely indicator. It allows you to take the pulse of the global economy and see what's going on out there. These will be released on Friday, and they will cover the month of November. So like I said, very timely because it's still November. So we will get the Aussie flash PMI at 11 o'clock on Friday morning. That will be followed by Japan at 1:30 after lunch, and then the corresponding releases for the UK, Europe, and the US will come out on Friday evening. We can look at them on Saturday morning when we get up. Last month, these were pretty solid. The October readings were all pretty solid. PMIs for most regions, actually all of them, apart from Japan, pointed to expansion. But the pace of growth was a bit subdued in places like Europe and in Australia. The US still by far the strongest, so the US economy is still in very good shape compared to everyone else. However, we do need to keep an eye on those inflation indicators. Remember, we've just seen that inflation report in the US. It's at a 3-month high, and you've got a Federal Reserve that is now talking about maybe going a little bit more slowly. Some of those inflation measures and indicators in the flash PMIs might be worth keeping a close eye on. Elsewhere across the world, we will be watching inflation readings in the UK and Japan, and there is quite a long list of central bank speakers. We had the Federal Reserve last week with Palo giving a speech. Next week, we will hear from the Reserve Bank of New Zealand. That will be interesting. 50 basis point cut expected next Wednesday afternoon. But this week, we'll hear from the Bank of Japan governor. That is something we'll be watching because there is a Bank of Japan decision coming up in December, so we'll be looking for any clues about what might happen at that. That is on Monday. And then the ECB president, which is Christine Lagarde, she is speaking on Friday. So a couple of the central banking heavyweights due to come this week. Right, there's also lots to watch on the earnings front out there across the world. Most of the reporting season is done and dusted, but the world's most valuable stock, NVIDIA, reports this week on Wednesday. That will be Thursday in New Zealand time. It's Wednesday in the US, so we'll get it a day later. That will obviously be a major focal point for investors because it's the biggest stock out there these days. We'll also see earnings releases from Walmart. What day are they reporting? I think they're on Tuesday. Yeah, Tuesday, Walmart. Palo Alto Networks is on Wednesday. That's the same day as NVIDIA. Deere and Baidu both reporting on Thursday. All of those are US companies. When I say Tuesday, Wednesday, Thursday, I'm talking about US time, so it's always a day later. You sort of keep an eye out for it the following morning. So plenty going on, as always. Dairy prices here in New Zealand, a couple of central bank speakers, a couple of inflation reports, November flash PMIs that will allow us to take the pulse of global growth, and some really interesting corporate releases, particularly NVIDIA on Wednesday. Right, I can hear my 6-year-old yelling out to me, wanting some attention, so that is my cue to sign off. Enjoy your week, team, and we'll talk again soon. Thanks for listening.
For more insights, visit craigsip.com.